Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Today is going to be a technical analysis video, and we're going to break down the markets. Okay, we're going to take a look at the S&P 500 on a daily time frame. We're also going to take a look at the S&P 500 on a weekly time frame, and start off with a little bit more of the simpler concepts here before we dive into some of the more complicated concepts on TLT. Okay, now this is the daily chart for TLT. And this is basically what I'm looking to play out. A 1, 2, 3, and then wave 4 was actually this triangle pattern. And, we had this triangle pattern here for a very long time. And that ended up being our wave 4. It was a little confusing, but ultimately, we're looking for wave 5 down now, which, wave 5 is going to come down in here, and that's going to be a 5-wave structure. And when you zoom out and take a look at the weekly time frame, okay, and you can see all of these, billions of drawings that I've got here ever since I started trading TLT in 2022, you can see 1 down, 2 up, 3 down, wave 4 up is this right here, okay, is this triangle pattern. This is our wave 4 up, and then wave 5 is going to take us down here. All right, so we're going to break down all of that in today's video, and we're also going to take a look at TNX, the 10-year treasury chart. Okay, and this is kind of supporting that theory. All right, the TNX has been following the analysis very well. Most recently, we got an ABC correction to the downside. I spent a lot of time and updated this, and I think I found the path of where the yields are going and potentially where they could be topping out at. So you're going to want to watch all the way through to the end. Be sure to smash the like button and subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, if you guys aren't familiar, I actually started a completely free newsletter. Okay, it's called Investment Intelligence. There's a link in the description and comment section down below. I go over really good, free, valuable content for you guys. And I also try to sprinkle in free trade ideas. This was a trade idea going over the setup and some of the conditions on Tesla. And you can see that that trade played out very perfectly after the abandoned baby and trendline break. We got a clean break and retest, pushed up higher. If you trade options, that was a very profitable trade. It's not just things like Tesla, okay? I'm also bullish on things like energy. If this is a from the newsletter on ExxonMobil over a month ago, okay, talking about being bullish on energy, and ExxonMobil was one of those stocks. It was at 111. It broke out here, went up to 117, and is really potentially trying to go up and make new all-time highs and get above 119.79. Okay, 119.79 is our price target right now. We're going to see if it can hit that area, but even if it doesn't, it's already been a profitable trade. And it's not just long positions too. We also go over short positions. This is SWK right here. This is one of the very first trade ideas I sent out in the newsletter, talking about the rising wedge, going over some of the key levels of support, and you can see how it played out exactly, came right down to our target here. So remember, if you guys enjoy free, valuable content and you guys are looking for free trade ideas and setups as well, sign up for that newsletter, okay? The link is in the description in the comment section down below. You can always head on over to Ko-Fi as well. If you guys ever want to request a specific YouTube video and you feel like there's a video that hasn't been created going on a specific topic, strategy, or tutorial, or you guys like me and want me to do my analysis on a specific ticker, come here to the Ko-Fi page, click on the commission side, and you guys can come in here and request a specific YouTube video. I've got the first, official Ko-Fi request coming out very, very soon. So stay forward to that. You can also come in here and request a one-on-one personal session, okay? I do these one-on-one sessions every single week. There are 30-minute sessions as well as 1-hour sessions. Those can all be found under the commissions tab. And if you ever enjoy the free, valuable content that I put out for you guys, you can always use this platform here to leave a tip or donation simply by hitting that buy a coffee button right there. Now, with that being said, let's go ahead and get into the meat and bones of the video and head on over to TradingView. Now, as I mentioned, we're going to start off with some of the simpler concepts here, and we're going to be doing a lot of Elliott wave stuff in here. So if you're not too familiar with Elliott wave, basically markets move in about 3-wave or 5-wave structures typically. And on the daily time frame, it's very possible, in my opinion, that we're setting up our wave 4 to the downside to potentially get that wave 5 continuation to the upside for the end of the year rally heading into next year. Okay, we've got a nice 1 up here, and then, your wave 3, all right, your wave 3 is going to be typically a 5-wave move. And so you have 1, 2, 3, 4, 5 up right here. So wave 3 has been completed. And your wave 4 is typically an ABC, which would be an A down, B up, C down. And so we're starting our wave C. It's completely possible, all right, even though that there's tons of FUD and, you know, lots of fear, uncertainty, doubt in the market right now, and it feels like a complete bloodbath, it's very possible wave C has been completed. We have come here and made a lower low, and we're currently at the 38.2% retracement level. But if you notice, we're basically trading in this bearish channel at the moment. So it's completely possible we just continue to head lower, okay, and try to come down to 420.45. Okay, that's going to be the next major support level if we do happen to break 429.82. And again, even though all of this seems short-term bearish, when you take a look at the bigger scheme of things, right, ultimately this is going to be the potential setup for the next move to the upside. All right, you know, that's really what I'm looking at right now, and what I'm paying a lot of attention to is trying to figure out when this wave 4 is going to end. Okay, now for you bears out there, okay, if we go to a weekly time frame, there's a really bearish scenario out here that's completely possible. Okay, and we're going to start off here just simply breaking it down. Okay, remember we said the market tends to move in 3-wave and 5-wave structures. Well, your 3-wave structures are typically ABCs, and those are your corrective waves after a large move to the upside. Okay, and look at the massive move to the upside the market has had, obviously, right? So if this is all, you know, a huge correction, okay, what we're seeing right here is we had our A wave down to the October lows. Then we had this tremendous rally here for a B wave. And then our C wave is going to potentially even break through the October lows and come down to 328, potentially even 292. Now, that is an extreme bearish scenario, but it's one you want to keep in mind. Now, we're not going to really pay too much attention to that scenario until we see signs that this wave 4 is invalidated here, okay? Because on the weekly time frame, it does look like this is a 1, 2, 3 up, right? This looks more of an ABC up, which your B wave, basically your even number wave. So if it's an ABC, it's going to be your B wave. If it's a 5-wave structure, it's going to be your wave 2 and your wave 4, okay? Those are going to be ABC waves, right? And so it's very possible that this A wave down, we had a very clear 1, 2, 3, 4, 5, and then you're supposed to get an ABC, so an A, B, C, and then you get another 1, 2, 3, 4, 5 down to your C wave targets. So, you know, that's something to definitely keep in mind. That's something that the bears are going to eat up and super enjoy. But for right now, we haven't had validation of that. Now, it does seem very possible in the short term that we are going to continue heading lower and potentially come down to 425. And I'm just going to throw on the Bollinger Bands real quick and show you guys why. Look at what's happened each time that we have broken through our middle Bollinger Band. Okay, that's what we're experiencing right now. So let's take a look, folks. Okay, here, broke through the middle Bollinger Band, closed below it, and we experienced more room to the downside. Here, broke through the middle Bollinger Band, closed below it, experienced more room to the downside. Okay, over here, broke through the middle Bollinger Band, experienced more room to the downside. Right over here, broke through the middle Bollinger Band, experienced more room to the downside. Here, broke through the middle Bollinger Band, experienced more room to the downside. Here, broke through the middle Bollinger Band, most likely we are going to experience more room to the downside. Okay, that's just a very realistic probability, you know, based on what has happened with the Bollinger Bands. Okay, now we went over the daily time frame, right, and showed you guys how that doesn't completely wipe the bull case out. We're still in that wave 4 territory, and ultimately at the end of the day, I'm going to put this on here on the chart. Actually, we are, you know, bearish once we are below. Oh, I got caps lock on real quick. Sorry, let me fix that. But ultimately, we're bearish really once we flip 411 to resistance from support. Okay, if we come down here and break through this 411 level and, you know, not just get like a false breakdown, but we actually flip this level to resistance and we start trading below there, that's when this ABC to the downside becomes more of a possibility and something that we really need to be cautious of, right? But until then, the daily chart is telling us that we're in wave 4 territory. We're in a bearish channel trading at the moment. And, you know, based on the weekly chart Bollinger Bands, it does say, you know, we potentially have more downside in the near term. Now, let's go ahead and take a look at TNX real quick. Okay, this is going to be your 10-year treasury yield. right? We go to the daily time frame here and take a look at this for you guys. All right. This may seem a little complicated, but I'm going to try to make things as simple as I can. Okay. So remember, after you get your 5-wave structures to the upside, you typically look for an ABC down, right? So TNX 10-year yield, 1 up, 2 down, 3 up, 4 down, 5 up. And after we did that, we completed an ABC to the downside. Remember that SPY chart, how we just wrote bearish below our 61.8% retracement level. We're doing the same thing here with TNX, okay? And we've been doing this since, really the end of last year is when we, started tracking this structure here. And ultimately, this is a bullish structure for it. Now, remember how we said the things about 3 waves and 5-wave structures, okay? So remember, your even waves, so your wave 2s and your waves 4s and your wave Bs, okay? Those are typically 3-wave structures. Now, your odd numbers, so your wave 1, your wave 3, your wave 5, those are typically 5-wave structures. So when you see this right here and we're counting a 5 up, okay, that is all of wave 1 right here. All of this is wave 1. After we completed the larger 5, got the ABC down, and now this is all 1. Okay, this is all 1. But when you break things down on a smaller time frame here, okay, or rather just zoom in a little bit more, which is what we're going to do. Let me start it off over here, and you can really see, how good, these structures are, right? So here's our wave 1 up, and notice how we're trading in this bullish channel, right? Top here, top here, top here, and we're approaching a top again. We've got a bottom here, bottom here, bottom here. So we're trading in this very, very structured bullish channel right now. Okay, we got a very textbook breakout and retest of this blue line right here, and that followed the ABC, very, very well. Let's go ahead and break it down, right? So remember, our even waves, we're looking for wave, wave 2, we're looking for an ABC, right? So we had a wave 1 up, then we got an A down, B up, C down right here. So that completed our wave 2, okay? And then our wave 3 is going to be a 5-wave structure, right? We talked about that. So here's our 1 up, 2 down, 3 up right here, 4 down, and then 5 up, okay? Now, originally, I had this as the 3 right here, the 4 right here, and the 5 right here. But the way this was behaving, because there was really no ABC right here, this no ABC correction, and your wave 3 is typically the strongest and most impulsive out of all of the waves. I think that the wave 3 actually completed up here, okay? And then we got our wave 5 up here. We got an ABC to the downside for wave 4, okay? Wave 4 right here. And now we're looking at 1 up, 2 down, 3 up, okay? Now our wave 3 could have topped out right here. Okay, what level is this? Let me figure out real quick. Wave 3 could have topped out right here and hit the 1.0 extension at 4.461. That's very possible. Okay. So, this is just a guideline to see where potentially it could go and where it could head further into the future. But, we could be topping out here on wave 3 and trying to start our wave 4, and then our wave 5 up here would take us to about 4.613. Now, if this wave 3 right here is not done and it wants to continue heading upwards, it's going to head up to about 4.533. 4.613 is going to be the targets for that, and then we would get our wave 4 pullback, and wave 5 would come up here targeting 4.713, potentially even 4.890, just depending on how high yields want to go. Okay, now there's a lot of factors into why treasury yields can go higher. Okay, this is a technical analysis video. I covered lots of macro data. Okay, I covered lots of things. Janet Yellen has been flooding the treasury market. She's flooding the treasury market. Trillions, $1 trillion, okay, is her plan to dump $1 trillion into the treasury market. No matter how much retail buys treasury bonds, okay, they're not going to be able to just automatically, soak up the $1 trillion that she's trying to put into the treasury market, okay? Institutions can try to come in and soak that up. There's been tons of inflows, right? There's tons of inflows into bonds, ETFs. Retail and institution, they are buying bonds, okay? They're at historic yields right now. It makes a lot of sense to buy bonds, okay? They're actually attractive for once. But at the end of the day, not only is Yellen flooding the treasury market, Japan is the biggest holder of US Treasuries, and they've been dumping US Treasuries massively. Who's next behind them? China. China has been dumping massive amounts of US Treasuries. Okay. So not only do you have Yellen, okay, basically flooding the Treasury market, you also have the biggest holders dumping massive amounts. Okay. And there's other countries as well that are selling US Treasuries on top of that. All right. Now, as the way that, Treasuries and bonds work, okay, is if there's not enough buyers, if there's not enough demand, yields are going to go higher to attract more buyers to, create that demand. So, the prices of bonds are going to go lower as the yields are going to go higher, basically through all of this. So, there's a lot of catalysts and a lot of reasons why this bullish scenario can actually play out. Now, the big question is, whether this is just a fake out. And I ultimately think it's going to be a fake out. Okay. Now, things aren't too clear for the next 3 to 6 months when it comes to something like TLT, if it's going to bottom sometime soon or where the bottom is going to be. But ultimately, I think that, within the next 3 to 6 months, the Fed will be done raising rates. Okay. And, a lot of people are even trying to say that the Fed is going to start cutting rates within the next 3 to 6 months, right? And maybe even in the second half of 2024, maybe it may be in the later half of 2024, maybe it may be in the beginning of 2024. The thing is that they're not going to cut rates until something is broken, right? Until there is a big problem in the market. And once that happens, bonds are going to be a really good hedge for stocks. All right. And if you take a look, whenever the yield curve uninverts, okay, is, around when the Fed is cutting rates, and it hasn't been good historically for stocks. What it's been good for is bonds. Okay. So, if you're long the stock market and you're looking for a good hedge in case we get a recession, in case the yield curve uninverts, in case something breaks in the economy, the bond market is very attractive right now. Okay. Now, there's opportunity costs if that never happens, right? And let's say a recession never comes. Let's say the Fed never really cuts rates for a very long time, and you go all in on the bond market and the stock market goes ballistic. There's opportunity costs. There's always going to be some form of risk with any type of investment. So you do have to think a lot about these things and not just buy into them blindly. Now, rant over, all right, a little bit of the macro stuff over, and I just wanted to give you guys an idea of why this stuff can continue to go higher, okay? So again, the green channel right here, we're looking for a 5-wave move, right? 1 up, 2 down, 3 up, 4 down, 5 up right here, okay? Potentially taking us up to 4.713, even 4.89 on the 10-year Treasury yield if we want to continue going higher, all right? And we're in a micro sub count right now of a 1, 2, 3 to the upside. We're looking to see if wave 3 is topped out here, or if wave 3 has some more room to the upside before putting in a wave 4 and 5 to complete the larger 5-wave structure right here. Okay. Now remember, looking for wave 5 on TNX. Okay, a yield, Treasury yields. Right here, TLT, we're looking for wave 5 to the downside. So, a lot of these analysis are lining up with each other, right? Remember, we talked about how this triangle pattern right here was nothing more than a wave 4. It was an A, B, C, D, E wave, wave 4, and wave 5 is going to potentially take TLT down to about $89. It could go even lower. Okay. But I definitely think that, if TNX is going to continue to remain bullish and the yields have not just topped out, because that's basically what needs to happen. Basically, yields have to have just hit their peak for TLT to not go any lower. All right. So if you think that Treasury yields aren't going any higher, and think about it, the Fed has basically hinted that they're going to do one more rate hike. So one more rate hike is potentially going to drive yields higher one more time, right? And that's going to complete that 5-wave structure to the upside, potentially on TNX, and that's going to complete this 5-wave structure here to the downside on TLT. Okay, and that's just where I'm at with it, right? That's just my thoughts. That's my honest opinions, and I could be 100% wrong. I could be 100% right. I'm not here to try to be right or wrong, but I'm here to, provide you guys my thoughts and my analysis, right? So 1 down, 2 up, 3 down, 4 up, 5 down. We're looking for this wave 5 to complete. And I believe that this is going to be the bottom. Okay. After we complete this one wave 5, this is going to be a bottom area for the bond market, for the Treasury market. And I think that it's going to be a really, really good opportunity. Now, whether you want to get in, you don't need to try to time the bottom. Okay. It's very possible. Again, we did put, a lower low here. Okay. And this could be our wave 5, right? If we drag this up, this could have been wave 5 right here and we could have bottomed. It's very possible. So, you don't have to try to time the market, and, you can average in at specific price points that you feel comfortable averaging in at. You can average in on a time basis. So once a week, once a month, however you guys want to invest in things. It is up to you. And there's lots of different ways. There's lots of different strategies. There's lots of different funds besides TLT. TLT is kind of like the big dog that everyone really pays attention to. There's lots of other funds. There's junk bonds. There's JNK, HYG. There's LQD, IEI, EDV. Okay, many other type of treasury and bond related instruments. But ultimately, at the end of the day, this has basically been my breakdown on the stock market and the treasury market and the bond market currently at the moment. Hopefully you guys enjoyed this video, and hopefully you guys enjoyed this analysis that I put together for you guys. And remember, there's a free newsletter giving out free trade ideas every single week, giving out free valuable content. All right. It's called Investment Intelligence. And there's a link in the description that you guys can use to sign up, as well as the comment section. Completely free to you guys. Really good way to help support me and help me grow my brand, as well as, help yourselves out. It's not spam. Okay. I'm not going to spam you guys with a bunch of BS. It is actually really good content. It's unique from YouTube. Okay. Everything on YouTube is not just going on the newsletter. The newsletter isn't just stuff that I'm later going to upload to YouTube. Sometimes they have a little bit of correlation with each other, but at the end of the day, it's going to be unique content, that you guys will appreciate and enjoy. I'm sure of that. And that's pretty much it. Okay. If you guys want to book a one-on-one session, a 30-minute session, a 1-hour session, head on over to Ko-Fi using the link in the description as well. You guys can book a session directly there. If you want to request a specific YouTube video, if there's, some type of analysis or strategy or anything like that, you guys would like me to make a YouTube video on, you can, request that on there. That's where I'm doing all of the viewer requests now. And to have it nice and organized, in between all of the, there's too many comments on YouTube for me to, always be able to keep track and remember, something that somebody has requested. Ko-Fi is going to be a very direct platform and direct way of doing that.